Made an 84% return in NEM in less than 40 days. So this video is going to walk you through a ratio call diagonal position that I put on in NEM. And I want to walk you through essentially how I've managed the trade. It's been a while since I've done one of these trade deep dives. So this one's not going to be edited. We're just going to get straight into the details and start working through the position. So here's in a nutshell what played out. On the 4th of March, happy old birthday to myself, I guess. I gave myself a gift. I saw NEM starting to break out in a pretty big way, and it popped up on one of my alerts, and this is where I entered the trade. Now, what's the origin of all of this? It's kind of simple, and I've been talking about this stuff on my YouTube lives actually for quite a while, and it's the rotation that we're seeing still from capital tied up in things like, if I zoom this out a little bit more, like 6 months, you can see that on a longer term time frame, IT, communication services, these have been killing it for the last year plus, and definitely within the last 6 months. But if you take a look at some of these shorter term time frames, like if we go here to 3 months, you'll notice that energy, materials, industrials starting to creep up towards the top a little bit. If we go into 1 month, you'll also see that we still see energy running at the top. Materials still down towards the bottom, but it's important to click within materials because metals and mining has been doing a great job for some time. So you can see metals and mining is actually up 15% as compared to some of the other subsectors of materials that are struggling. So because I've started catching some of this rotation of capital into these other products, especially against the broader inflationary environment that we're in, I became really interested. So NEM popped up on one of my scans, and I decided to essentially just watch it. And I didn't like it here at all. So what I ended up doing was setting an alert right here at 31.31. And it's just because this is kind of where I saw near-term resistance if we started to get some sort of pullback and we started to see a little bit of life come through. It's hard to see because it's kind of suppressed, but you can actually see that volume on these up days started to expand. So that was interesting to me. And I ended up getting the alert after it cracked above 31.31 on the 29th. So then I was watching it on the 1st of March. I was keeping an eye on the volume as we're running into this. And then actually when the dividend was coming out, you know, you'd never know necessarily against broader market conditions. I didn't necessarily, integrate it too much into the decision cycle, but I was aware that there was a dividend coming up. And then on the 4th, I started seeing this really strong volume. So I entered into a pretty speculative, so this lived within my speculative allocation of the portfolio, but I entered into a ratio call diagonal. So the broader market hypothesis, kind of what we've been talking about, high inflation, now especially higher for longer, is becoming a theme. Tech is still doing well, but starting to fall off a little bit. We're coming into an earnings cycle. There are, a handful of things coming to the forefront of my brain, but the main thing that I want to highlight here is the rotation of capital into things like metals, into things like energy. I actually have a couple energy trades on as well. Now, the primary profit mechanism in here was a bullish thesis, meaning I wanted NEM to go up. My original targets when I entered the trade were 42 and 31. 42 simply because that is where the near-term high was, and I would love to see us run up there. I didn't think that we would run straight up there, but that was the near-term target. And then 31 because I was actually setting a really tight stop to the downside on this. And it's because it's in a broader downtrend. I viewed this as a really speculative entry. I typically don't like to enter things when they're running down like this. I look for strength. But because I saw strength in the broader subsector, it made me interested on this volume breakout. So once I saw it crack up above this kind of, 32 handle, that's when I really thought we were seeing some strength. So the original trade that I put out was a 45 lot of the 30 calls expiring 21 June 24. And this was back on the 4th of March again. So this originally was allocated to be a $25,000 position in its entirety. And I wanted to use most of the capital upfront because I had such a tight stop loss on the product. The reason why I went with a ratio called diagonal is because I wanted to leverage to the upside. I also typically prefer the efficiency as compared to buying the shares, although either in this case is fine. And I went out to 21 June at the time of entry because that falls into kind of my standardized days to expiration target time frame for ratio call diagonals. I like the longs to be definitely longer than 60 DTE, typically 90 plus. I've used to be over a year for almost all of them, but I've actually slowly have brought it in quite a bit. And normally it'll be somewhere around 90. Now with NEM specifically, liquidity was a concern. So I had to find decent offerings that led me to an entry that wasn't overwhelmed by super wide bid-ask spreads. And that's actually why I ended up at this. So when I first put this on, it was a little light on the deltas. It was like a 70 something delta. I typically prefer 80 plus, but again, liquidity kind of drove me in that direction. Now, when I first sold calls against the position, that's actually this line item here, you'll notice that I only sold 10. Why did I only sell 10? Well, it's because I wanted to see more follow through. And I started to see it, but then it kind of just started trading sideways for a while. And actually during a couple conversations with the pro community, I was talking about unwinding this position for a small profit because it hadn't yet done what I wanted. And it was getting a little bit long in the trade because I originally wanted to manage this position before we came into earnings on 25 April. Now, I was okay to hold through earnings if we had a sustained move, and it looks like we still are having a pretty decent move, but it's not quite enough. And I also have some travel coming up, so that leads into a little bit of the decision to unwind. But going back to the choice on the ratio, that's why it was so light, because I was sacrificing the money up front because I really wanted to try to maximize my upside potential in the position. And I collected 60 cents on that. So it was 600 bucks, and those were 32 delta. And obviously over the life cycle of this trade, they actually fell in the money. So if we go to 20 March here, you'll see that's where the position was managed. And that is right here. And essentially what I wanted to do was roll out and up to give me some more upside potential to see if I could, get the calls a little bit out of the money, but keep the ratio. I didn't want to add any size because I wanted the upside profit potential. So that's what I ended up doing. I was able to take the 34s to 35s. I had them out to 19 April. And I collected 88 cents. So a small credit on those of 20 cents, same size. And obviously those fell deep in the money. These came off today, the 11th of April for 435. So the total aggregate P&L on the short call side of the trade did nothing but serve as drag on my returns. It was a 35.50 loss in total. So fortunately, sometimes when you get these really big, powerful moves, the short calls, as you would expect, they really decrease our return profile. Now, what ended up happening in the position, I started with, like I said, it's around like a 78% allocation. I was targeting around 75%. And then I saw this next breakout. So I had another alert set for anything above this 35.22 handle. And we saw it on the 28th of March. We saw a slight uptick in volume, not quite as much as we saw earlier, but still enough that it registered for me. So in this case, I chose to add a little bit to the position. And that's what you see down here. So I added 5 of the same exact contract for $6.32. So that took my aggregate basis to $455. Total investment at this point is $22,735. I was actually saving a little bit more room to scale in again if I just started seeing volume fly off the handle. This is a little bit of a mistake. And the reason why it's a little bit of a mistake is because based on the amount of time I had left in this trade, against my original premise. If I were to scale in here again, I probably would have gone with the rest of the allocation because it was a no risk trade at that point. What I did was slide the stop up from 31.70 and change, and all I did was bring it just below this really aggressive consolidation period that we had here. So it went to like 34 and change, which would have locked in a profit. And then I slid it up again to 35.26 actually on this day, the very next day. And from there, I just start using the moving averages to follow the trend. So my game plan, because of the constraint for timing, I was going to use this moving average as my exit, which is just a 9 or a 10 day. So that led me to today, where we fell off a bit. I see the candle today. It still looked pretty strong, really light volume though. I didn't love that. So as I saw the day unfolding, I ended up exiting today because it's at a good profit. My next stop, as you can see, was moved up here to 37.77. And the probability of this channeling sideways for a little bit before it regains some steam is moderate, in my opinion. And this realizes a pretty decent amount of profit right out of the gate. So what I ended up doing was offloading all 50 of the 30 calls. And again, I bought them for an average of 455. And I ended up selling them for 910 average today. So that takes the realized P&L on the long calls to 22,765, less the 3550 from the short calls. So that takes the total P&L of the trade to 19,215, which is an 84.5% return on invested capital. So a couple notes that I want to highlight here specifically is I still think this rotation is likely in play. However, it might slow down a little bit with the current rate environment dragging out as it is. And it wouldn't surprise me to see capital starting to rotate back into tech, which is something that I'm keeping an eye on. However, we're at a really interesting market position, especially whenever we end up getting closer to this rate cut actually happening. I think that you'll see things like this start to move even more still. But this was a way essentially for me to gain exposure to gold because this is one of the largest gold miners, and it came up on a couple of my alerts. So that was the trade. I have a few others that I've actually talked to the community about in different products, but this one I thought was interesting because of two things. One, the mistake I made here, and two, because this is something that it was actually coming up on my time horizon to manage this trade because it wasn't performing. And I got a decent move. It was running a small profit, but it wasn't moving enough in order for it to make sense. But I gave it just enough time that it started to pop out for me, which is, again, ideally what we wanted to see here. So that's the trade. If you have any questions or anything that you want me to dive into about it, just let me know. Happy to. Like, subscribe, share, be an outlier. See you guys later.